Money. Money.
Little market news today. Initial job claims, which measured individual filing and unemployment benefits for the first time, was reported at 260,000 last week. This represents a drop of 12,000 from the previous report, which was unrevised at 272,000. These figures are still skewed due to the hurricanes in both Texas and Florida and will likely continue to be for some time. The Bureau of Labor Statistics job report has been significantly lowered from estimates at only 100,000 jobs created due to the hurricanes. If the job figures and stronger than that, the market will understand that as the job market being really strong because of jobs were created above what's expected, even in spite of the discipline in job creations due to the influence of the storms. If the number comes in modestly benefit expectations, it will likely be discounted given leeway on the markets will say that the full impact of the storms has not been factored into the estimates. So because of this, there's a better chance that the stock market will not react negatively to the jobs numbers. Last month's numbers of 156,000 new jobs with 4.4 unemployment rates. The market expectations of 100,000 new jobs with 4.4% unemployment rate. On the housing front, some important housing data came out last week. The CoreLogic Housing Price Index showed the home prices rose by 0.9% in August and 6.9% year over year nationwide. The year-over-year rate accelerated from 6.7% last month and continues to show very strong and meaningful appreciation levels. CoreLogic forecasts that home prices will rise by 4.7% in year going forward, and that they are usually a bit on the conservative side. Now, this again is the national average, and most likely stronger appreciation here in our Seattle market. Last on a little bit of a news, President Trump has been meeting with some of the possible replacements for the Fed Chair Janet Yellen. Yellen's term is up in February, where Trump could extend her term or release her. The current frontrunner for the job is former Fed Governor Kevin Warsh, who is seen as a much more hawkish individual than the dovish Janet Yellen. If he was chosen, he would likely be quicker to hike up the rates and have less accommodative monetary policy. So it'll be interesting to see what happens with that as well, what happens to the Fed fund rate. And that's the Money Chat for today. Coming up next in the Money Hour, we're going to have a conversation again on automobile appraisal, collision, and repair. So you definitely will want to stay tuned. Right here at 11:50 a.m. KKNW after this short break.